Good day, ladies and gentlemen. Welcome to Everyday Finance with Jay. My name is Jay. In today's video, I would like to discuss about how and when to invest in the stock market currently during these uncertain times. And a lot of people have talked about how we have already bottomed out in the stock market. And now we're seeing this rally back up to where it was before, or people call back to normal life before coronavirus. But there's also this other side of the argument about the dead cat bounce, where let's say you drop something that is not alive from a high point and it will hit the ground and then bounce and then keep on bouncing. But that in the stock market scenario means that with each consecutive bounce, it will going to decline more after the rally, after the stock market rises. If you look at the dot-com bubble in early 2000, where the stock market crashed, there was several, not just a few, there's several rallies after the dot-com crash that went up 20% each time. But the market eventually bottomed out at about 50% to where it was at the initial recession, which means for us would be sometimes in February. And if you take that analogy from the dot-com bubble, 50% from February, we're still a long way to go. And with what happened last couple of weeks, there is so much uncertainties left in the market right now that it is very, very difficult, if not impossible, to predict that we have already bottomed out. So a lot of smart investors do not recommend to just invest everything you have right now, because some people say that we are currently at a bottom. So this method to counteract that phenomenon, a good way to do that is to invest at different occasions, because nobody can predict what's going to happen in the stock market. So if you invest at different occasions, you may or may not have invested at the true bottom, but at the same time, you would have also taken advantage of not investing everything at one time and then the stock market crashing 10, 20, or 30% more. So one way a lot of investors recommend is to break apart the amount of money you want to invest into different chunks, like say 4, 5, or as many as you like that you're comfortable with. Let's work through an example of $10,000 that is besides your emergency fund, because your emergency fund, as everyone should be aware of right now in times of crisis, is that just unexpected payments. For example, if you don't get paid from work, or your car breaks down, or unexpected water leak, or anything comes up, a little bit of extra cash set aside 3 to 6 months, or as much as you feel comfortable you need, should be on top of that. Let's work through this example of $10,000. For this example, I'm going to break it up into 4 chunks, so $2,500 each. And for this example, we're going to invest at different times. Let's say we, a month ago in March, heard about the $2 trillion stimulus package. So between March 18th and March 23rd, the stock market was haywire, going down and down and down. So when you see that happening, the great investor Warren Buffett once said that once there's blood in the street and people are freaking out, that is when you should start thinking about being greedy, because that is an opportunity to take advantage of really low prices. So around that week, invest $2,500. And a week ago, another phenomenon, the oil market was crashing. And it crashed all the way down to about $20 a barrel for a few days. And now it's back up in 27, 28. But back then, when the oil industry was doing poor, you and I were enjoying really low gas prices while filling up our cars. But at the same time, that should be a signal to look at the market and either take advantage of like an index fund, which invests to a bunch of different companies, or companies are, for example, Chevron, ExxonMobil, these large oil companies that are basically too large to fail, because once those companies goes bankrupt or fail, not only does that affect their company, but it also affects an entire country. I'm sure the government will bail them out, just like the airline industries, giving out loans, billions and billions of dollars. At that point, if you take advantage of a low price like a week ago when the oil market was $20 a barrel, that is definitely true in the future, that if you're investing for the long time, that it will go up in price. You may or may not take advantage of the very bottom, but you still will make a good profit. And right now, the investment strategy is to look for the long haul. 10, 20, 30 years from now, when you need the money to retire, that is the strategy that, you may not have gotten the best of the best return because no one can predict the bottom. You have gotten a really, really, really good return. The next question in the foreseeable future is, what do you do with the remaining $5,000 in this example? What I personally see in the future until the market to start back growing again, there are two criteria. One of them is a little bit more important than the other one. The first criteria is that the number of infected patients with the coronavirus to start leveling out or potentially declining. The example in the United States, we're seeing more and more and more people being infected with coronavirus. One of the reasons for that is because it's limited in the testing capacity. Not everyone who like to be tested for coronavirus can be tested because there's so many tests available, and the number of days for the results to come back could be upward to a week or even longer. So there's not really a proven way to recognize the scope of the coronavirus in the United States and around the world because testing capacity is limited. Criteria number two, which is more important because is vaccines and cure for this to be proven. There's a lot of these companies testing initial vaccines and cures that they have, but until it is proven, even if the number of infected cases start to level out or declining like what is reported in China, there could be a resurgence of number of cases. For example, some health officials predict a rise again in the fall. Until there is proven cure and vaccine available to just get rid of this coronavirus, the stock market, number of people that will be out of the business, small businesses going bankrupt, which employ a large deal of people in the United States, the stock market will reflect that. Might not be instantaneous, could be a few weeks when reports are coming out every month and stuff. Or stock market, you will see a trend downward. And until that, the cure or vaccine is found, there's a really, really high chance of the stock market going up, another rally like we have observed, and coming back down, up and down. So it's tough to be buying at the bottom because there's also an equal chance of it dropping even lower. So for example, a company I like to mention is Boeing. Boeing has had a rough year and a half, 2 years with their safety on the airplanes, and now with the coronavirus, the number of orders is declining. And Boeing, their stock price dropped below $100. And at that point, it was a great buying opportunity in hindsight because after that, Boeing made a massive growth up to 170, 50, or even more than 50%. So if you bought back then and sold a week later, you would have made 50% more on each stock that you bought. But the opposite side is also true because once Boeing growth went to $170 or a little bit more than that, it declined and now it's currently sitting at $120. So if you jumped on the bandwagon and buying Boeing at the wrong time, you could have also seen the number of cost per share decline by 20-30%. So right now it's really hard to gauge the market. So basically spreading out your money at different intervals throughout this whole thing, it would be a smart choice and the best way to invest your money. And for the foreseeable future, a lot of health officials, for example, Johnson & Johnson, the company, they're doing their initial human testing in September. And with emergency approval, they can roll out their vaccines early 2021. So what I said, emergency vaccine and emergency times. So these 12 to 18 months prediction It's for times of emergency. So it's not a regular occasion where companies can introduce a drug onto the market. So even the fast lane, like for example, if you're at Disney World, where you can skip the regular people, still will take upwards to a year and a half from now. So a lot of these people talking about we are reached a bottom. Is that really a bottom in the stock market? Because in the foreseeable future, more and more businesses will close and more people will be infected, and hospital capacity, for example, the ventilators in New York is going to run out in the near future. All these different medical supplies are limited. So with all these uncertainties, what I recommend is to spread out your investment, and everything we talked about today is my opinion and the research I've done. A lot of the links will be provided in the description box, but as always, investing in the stock market there's an inherent risk to your capital investment. So before you invest, consult a professional and do your own research. And please leave a comment down below with future video ideas that you may have. And thank you so much for your support, because at these times, it's human connection, relationships, and supporting each other is critical. And just stay healthy and enjoy the social distancing and Netflix and all these different streaming services. Have a wonderful day.